In this video, I'm going to explain exactly how to set up a family office in the state of Florida. And by the end of this video, you'll understand why Florida is one of the best states in the entire country for a family office. You'll know the different structures available to you, and you'll have a clear roadmap for getting yours up and running the right way. I'm Santiago Cueto, board-certified international business law expert and best-selling author based right here in Miami, Florida. Over nearly 3 decades, I've helped high net worth families from all over the world structure the wealth management operation right here in Florida. So let me walk you through exactly how this works. Let's start with the basics. A family office is just a private entity dedicated to managing the financial and personal affairs of a wealthy family. Think of it as your family's own financial command center. It handles everything: investments, tax planning, estate management, philanthropy, even lifestyle logistics like travel and real estate. Now, you might be wondering why you even need one. Well, the answer is control. When your wealth reaches a certain level, managing it through a collection of separate advisors becomes real messy, real quick. You've got your accountant over here, your investment manager over there, and your estate attorney somewhere else. None of them are talking to each other. A family office brings all of that under one roof. It creates alignment, and it creates efficiency, and most importantly, it creates a united strategy for protecting and growing your family's wealth across generations. So why Florida? Well, this is a question I get asked all the time. The answer starts with taxes. Florida does not impose a personal income tax. That includes income from interest and dividends. It also does not levy an estate tax or an inheritance tax. There's no state-level capital gains tax either. Compare that to a state like California, where the top income rate is over 13%, or New York, where you're dealing with both state and city taxes on top of federal obligations. For a family office managing significant investment portfolios, those savings are enormous. We're not talking about small numbers. We're talking about millions and millions of dollars over time that stay in your family instead of going to the state. But taxes aren't the whole story. Florida also has a robust legal infrastructure. The Florida Family Trust Company Act, codified in Chapter 662 of the Florida statutes, created a dedicated framework for families to organize and operate their own trust companies right here in Florida. And that's huge. Very few states offer that kind of standalone statutory framework. It means Florida took the time to create a legal environment specifically designed for families just like yours. On top of all that, you've got quality of life, year-round warm weather, international connectivity through Miami, and access to growing ecosystems of wealth management professionals. Family offices have been relocating to Florida in record numbers over the past several years. There's a reason for that. But before you set anything up, you need to decide which type of family office makes the most sense for your situation. There are 3 main options. The first one is a single office. This is a dedicated entity serving one family exclusively. It gives you the highest level of privacy and control. You build your own team. You set your own investment philosophy. Everything is customized to your family's needs. The trade-off is cost. Operating a single family office typically runs between $1 and $2 million a year. You need salaries for a chief financial officer, investment managers, legal and tax professionals, and admin staff. That's why this structure usually makes sense for families with a net worth of at least $100 million. Now, the second option is a multi-family office. This is an organization that serves multiple families. You share resources, you share costs, and you still get access to professional investment management, estate planning, and tax strategy. But you're splitting those expenses across several families. This model works well for families with assets in the range of about $25 to $100 million. Now, the third option is a virtual or outsourced family office. This is a more modern approach where you contract with outside providers for specific services. There's no large physical office, no big full-time staff. It's lean and technology-driven. This works best for families whose needs are less complex or for those who want to get started without committing to the full overhead right away. Now, before I get into the actual setup process, if you're finding this information useful, do me a quick favor. Hit that like button. It helps this video reach more people who need this information. And if you want to keep learning about Florida business law, hit subscribe. I put out new videos regularly. All right, let's keep going. Step 1 in setting up a family office is defining your family's objective. It sounds pretty simple, but it's where most families skip and run into problems later on. You need to sit down and get clear on what this family office is supposed to do. Is it primarily for investment management? Is it for estate planning? And is it for wealth transfer? Is philanthropy a major focus? Are you trying to consolidate operations from a family business? Your answers to these questions will shape every decision that follows. I recommend creating what's called a family constitution or a family charter. This is a written document that outlines your family's value, your vision for managing wealth, and the guidelines for how the family office will operate. It defines roles and responsibilities, it establishes decision-making protocols, and it even sets up a process for resolving internal disagreements. Trust me, you want this on paper before you start writing checks. Step 2 is choosing your legal structure. In Florida, the most common structure for a family office are a limited liability company or a limited partnership. Both allow income and expenses to flow through to the owners. That matters for tax purposes. An LLC offers flexibility in management and profit distribution. A limited partnership can be useful when you want a clear distinction between the family members and who manages the office and those who are passive investors. Some families also explore forming a Florida Family Trust Company under Chapter 662 of the Florida statutes. That involves filing an application with the Florida Office of Financial Regulation and paying a $10,000 application fee. It requires an investigation by the OFR, but once licensed, it allows your family to provide trust and fiduciary services internally. Step 3 is addressing regulatory compliance. This is critical. If your family office is providing investment advisory services, you may need to consider registration with the Securities and Exchange Commission. There is an SEC exemption for family offices, but it comes with specific conditions. Family members must exclusively control the office. The office can only serve family clients and certain key employees. Getting this wrong can expose your family to serious legal liability. So you need to work with an attorney who understands these rules inside and out. And step 4 is building your team. You need the right people. At minimum, a family office typically needs an investment professional, a tax and accounting specialist, and a legal advisor. Depending on your family's complexity, you might also need a chief operating officer, a technology specialist, and someone focused on philanthropy. The key is hiring people who understand the unique dynamics of a family office. This is not the same as working at a bank or a brokerage firm. It requires discretion, it requires loyalty, and it requires a long-term mindset. And step 5 is establishing your technology and reporting infrastructure. Your family office needs systems for tracking investments, generating reports, and managing documents and maintaining cybersecurity. Data security is especially important. You are housing your family's most sensitive financial information in one place. A breach would be devastating. So invest in proper cybersecurity measures from day one. And let me leave you with a few mistakes I see families make. The first is moving too fast without proper planning. A family office is a long-term commitment. Take the time to build the foundation correctly. The second mistake is underestimating the costs. Even a lean virtual office has ongoing expenses, so make sure you budget realistically. And the third mistake is ignoring governance. Families grow, opinions change, but without a clear governance framework, disagreements can tear the whole thing apart. So setting up a family office in Florida is one of the most important and smartest moves a high net worth family can make. The tax advantages alone are worth the conversation. But when you combine that with the right legal structure, the right team, and the right strategy, you create something that protects your family's wealth for generations to come. Now, if this video helped you, make sure you hit that like button, subscribe to my channel so you don't miss future videos on Florida business law and wealth structuring. I'm Santiago Cueto, your Florida business attorney. Be sure to watch more of my videos right here.